Greetings, traders, and thank you for joining with us today. This is Mohan here, and I'll look forward to doing our Boomerang training class with you today. Before we get started, I just want to show you the disclaimer and risk disclosure that we have to put up here. And it's about letting you know that you must be aware of the risks of futures trading and be willing to accept them in order to invest in futures and options. Don't trade with money you can't afford to lose. This is not really the way to go with futures. You got to be fairly well off and have a nice account that's cushioned and you have backup capital and everything so you can stay in the game. It's a business like any other business, and it's very important to understand the risks. So with that in mind, I had in mind today what we're going to do is we're going to start out. I'm going back 10 days from today. I'm just going to start out about 10 days prior, and I'm going to do two things today. First of all, because we have so many new Boomerang owners and people coming in who are learning about Boomerang on eSignal and also on our NinjaTrader chart patterns and everything, I want to make sure that you understand the real basics of Boomerang and how it works, because I am getting some questions along that line. And sometimes, I do all these videos and tutorials and I think that I'm covering everything, but then sometimes I do look back and I forget that, because I know everything so well, someone who's brand new looking at it may not. So with that, let's get started. First of all, let me switch this over here to a pointer. Boomerang Day Trader consists of this. The main thing is we look to trade a pullback to the signal line within a new trade channel. And these trade channels are shaded right here. That's the essence of it. Now we have certain rules that tell us when to take a trade within a specific trade channel. We don't just take a trade because the market made a trade channel and pulled back the signal line. Now the components of Boomerang are real simple. First, you have the arrow that signals the opening of a new trade channel, which is right here on this candle. The new sell channel opened here, and it's going to point downward and be red colored. So that's the first thing, is the trade channel. Now the trade channel, as mentioned, is shaded here, and you can see the shading. So the second thing within that is the trade signal line. Now this trade signal line is really the first component, because the trade signal line, which is this thin dashed line, goes down and hits the actually colors the candles. You see that right here where the signal line is changing? Here's your first red candle, because the signal line is very sensitive and it changed colors. So here's your first hint of the market starting to pull back off this upward movement here. So here's the signal line. It colors the candles. Now the candles will change color from they are candles, so they'll be hollow and solid. The solid candles are bearish and the hollow candles are bullish, means they closed above the opening. That's another subject, but that's not part of Boomerang necessarily. I just want you to understand that when you're looking at these. So as the trade channel opens, the signal line runs through the trade channel, and from the opening of the trade channel, the first 6 candles will be marked with a pullback to the signal line. If that price comes down and pulls back to the signal line, it'll mark it instantly with a alarm dot, in this case yellow on the sell side and blue on the buy side. So that's the basic component, the trade channels and the signal line that runs through them and colors the candles. The next component is this line here, which is a faster moving average here, and this is called the Cobra. These are all special designed moving averages and combinations of things that I've worked with for many years to get them to the precision, to the point where we are the only system in the industry that guarantees 90% winning trades following our exact method. If you use another method or you make up something of your own, that's a different story. But if you follow the exact method I'm going to go over with and show you today, you'll see the proof right before your eyes. 90% winning trades and rarely get stopped out. The next component, okay, so we follow the Cobra, and then we follow what are called, these two combined are called the dynamic trend bands. You have the faster line, which is dashed and dotted, and you have the slower one, which is the thicker solid line. So what we watch for, these are the components. And let me tell you in a second what we look for. But below that, I want to cover this as dynamic, or this is the bias index number 2 down here, and bias index number 1. Number 2 I often call the market force indicator, and bias index number 2. So number 1 here is a more complex indicator which has various ways of reading it, but basically for Boomerang, all we're following is the dynamic trend band configurations. I've simplified it so much that that's practically all you need to follow. Now, if you want to follow the bias indicators, all you're looking for is yellow or same colored histograms on the lower side of the zero line for a sell force, combined with bias index number 2 down here turning red. These are only going to be red or green on bias index number 2. So with that in mind, what we're looking for, the rules are so simple. All we're looking for is the dynamic trend bands to take a trade in a trade channel is for these to be within a 2-point spread. 1.5, 2 points. The tighter the better. We're just, you can even glance at it and see, we're just looking for these to be tightly coming together because we're going to use the force of the crossover to get in a trade so that we have the maximum force on that side of the trade so it becomes a winner. Obviously, we want winning trades. So the way it works is that if they're not matching the same color, we look for a trade within the trade channel on a pullback signal line with the dynamic trend bands matching color, or if the DTB number 1 is within 1.5 points of crossing over the dynamic trend band number 2, such as in this case here. Now, that's all you need really to follow the rules. It's very simple. However, to make it a little bit easier and to make it accurate so that we can follow the exact rule and get the results we want, let me change this to a cursor here. We have some very simple rules. And that is, if the market makes a fast move off the new sell channel, in this case, this is an example of a trade where you would not trade the pullback signal line. It's called what I call a fat channel. If you turn your head slightly to the left, you can see the belly on this fat channel. It formed a fat channel, and we do not trade on pullbacks to the signal line on a fat channel. I'll give you an example, one that isn't a fat channel that we do, and that's over here on the buy side. But let me show you this one first. So what we do is that if it goes down here and pulls back, we don't take the trade. We just leave this trade alone, and down it goes. You see that? So what happens is you get the trade channel opening. You look for either the matching dynamic trend bands, same color means matching, means same color for bearish, the magenta color, bullish is the cyan or bluish color. Matching the trade channel, which is the sell channel. So that's the basics of Boomerang. That's really all there is to it. There's a couple other little rules which I'll go over in a minute, but basically we don't trade a fat channel. In other words, if the market shoots down lower, just forget the trade. That's all there is to it. Wait for the next one. Now, this one, for example, we wouldn't have taken this trade, so this is not a trade here. But what we're doing is waiting for the next one. So now you notice here, if I put my cursor up there and you look to the far right, you see that 99 quarter right there? And if I pull it down here, you see 97. So 97 to 99 quarter is about a 2 1/4 spread. If I move it right here, the spread is 97.50 to 99 quarter. So it's just about 1.75. So you probably would have missed this pullback to signal line here, which would have been a valid trade if this would have been a little bit tighter here on this side. If the spread here would have been a little tighter, or if we got a signal line right here, they're matching colors, you would have had a good trade there. But somehow, just the nature of the market is that this trade was not canceled. The only other type of trade for Boomerang, there's only 3. The colors are matching or they're within 1.5 points. You buy a pullback signal line in that trade channel, and that's it. The only other one is when you get what's called a second level trade. Now, in order to have a second level trade, you have all the channels and everything matching, and then you have a reversal in prices. So if it's an up market, you're going to see red candles reversing in most cases. But the requirement is to see, we have to have a new opposite channel print with the arrow. The arrow has to print, and in this case, create a sell channel, which immediately, in most cases, or sometimes after a few candles, will fail. We get a counter return to the buy channel, and then we immediately look to trade that next blue dot. So this one happened right when the new channel is opening, so you'd trade this one, and up goes the prices. Very, very simple. Did you see how that worked? So just going over this first day, you have the components of Boomerang, which is the trade channel. The trade channel opening is signaled by an arrow. You have the thin dashed line, which is the trade signal line. That's where when the pullbacks come in there, Boomerang is programmed to give you an instant alarm and a print on the signal line. You have the dynamic trend bands, and you have the Cobra. The Cobra usually is going to front run the market a little bit, so it's just an advance warning, and we look for that to be lined up in the same color with the trade channel and the DTBs. That's it. Now again, down here you can watch the bias indicators. You can see everything was up on the yellow on the top of the zero line. That's fine, and this was green, so it told you could take that pullback signal line if we had the dynamic trend bands matching or spread tightly together here. So no trade here. This one just missed it by a tick or two. You might have jumped in on this one, but according to the rules, the spread wasn't tight enough there. And this was a second level trade which panned out beautifully. And what we trade for is 3-point moves and a 5-point stop. Now, you can trade for more points and all that, but if you do that, you're changing the rules, and that's fine. You can go ahead and experiment. It's a free country, free world so far. But what I'm saying is that if you change the rules, that erases the guarantee of the 90% winning trades. So if you just follow the rules, you'll do incredibly well. Now what's important to understand too is a lot of people say to me, oh, look how much was left on the table here. Quote, left on the table. Here's an entry at 9 1/4, and they immediately shot up to 15.50 in this small move, and then shot way up substantially more to 27. Well, what I often tell folks there is I say, if you just get Boomerang and you learn the exact rules and you follow them meticulously, you can add more contracts, because you're going to find, if you do follow them, that most of the trades are going to be winners. So with that kind of confidence, you don't know that this 09 quarter is going to go to 26. You only see that in hindsight. When you're in that 9 quarter and they run up to 14.75, you don't know that they're going to come back to 7. And then you wouldn't, if you're trying to wait for the big move that you see in hindsight, you may never got anything, because you might have gotten a loss trade on that because you didn't follow the rules and take the 3 points. You see what I'm saying? So what I tell traders, I go, you want a 30-point move? That's fine. Put on 10 contracts. Get so good at Boomerang, get so expert at that you'll go in there and you can put on 10 contracts and you'll get your 30-point move. You'll have a fantastic $600-700 trade. It's like that in any job or any business. People hire people for certain jobs at a certain part of the aspect. My favorite classic example is like on the auto assembly line. Now, I've never worked on an auto assembly line, but it's just common sense that the guy who installs the engine and adjusts the carburetor and all that does not install the stereos and the speakers and all the electronic wiring for the stereo, right? In most cases, certainly he may be qualified to do that, but usually everybody's assigned to a very specific type of job. So similarly, in Boomerang, our very specific job within the markets is not to catch the big move. It's not to do this or that, or all these things you think you're supposed to, in quotes, be catching. It depends. Some traders are very good on marking and catching those big moves, but they take higher risk. They use wider stops. We go in and just pick off these 3-point moves on Boomerang. But what I'm saying is 30 points is 30 points. If you want a 30-point move, and that's what a lot of the big move people that I hear talking to me about for, after being in the industry 15 years and literally having 300, 400,000 emails over that period of time. I know what they're thinking. It's usually the one lotters. Oh, you left so much on the table, you could have got the big move. That's because they're only trading one lot. They want to get as many points as they can. And I simply advise them become very, very expert at Boomerang and put on 10 contracts. And of course, you can hear their voice shaking at the other end. And oh my God, oh my God. Well, that's where you have to build up that courage to put on that size, but it'll happen very quickly in most cases. You'll get your 3 points if you got 10 contracts. You'll get your 30 points. If you're trying to hold from 950 here to 26, which is only about, I think, what's that, 17, 18 points, you got a lot of risk here. You don't know they're going to run up like that. You're in the middle of this run up, and they could run up, hit a brick wall, and flop right back. And now maybe they're back on 7 or 8, and your trade didn't pan out at all. But if you had 3 points on and you put 10 contracts on, you would add a 30-point move, right? So I just want you to understand that. So the other rule is we don't take anything beyond a second level trade. Even though the market's pushing higher here, it doesn't matter. We don't care. Now there's a lot of little rules and things within that you'll learn here on these classes, as well as in the different reports that I put out. But one of them is when you get an extended move like this, usually you don't want to take the very first. You're 90% of the time you're going to get a choppy move after a large move like that. And if you want to take an opposite move, you can see clearly here. And that's why we use the 450 tick chart. I forgot to mention, but Boomerang trades with a 450 tick chart. Now, some of you may think, oh, why a 450 tick chart? Why not Renko's, or why not minute charts, or why not this and that? All I can tell you is I've tested all of those, not over a 2-month period like so many of the methods out there in systems. Over 3 years, I tested all the different time frames over and over and over before I released Boomerang. And it just kept coming back to 450 ticks. And at first, I didn't like it either. I thought I wanted to make it tighter and all this, but the 450 ticks is beautiful, and I'll show you why right here. You can see with sell arrow, yellow dots, green, blue dots, counter arrow. This is the market chopping around, and it immediately tells you when you see a candle of 3 points or more, like right here, 34.5 running up to 39, that's Boomerang with the 450 tick chart telling you stand aside, choppy markets, wait, don't trade. And this continued for this whole period from about 10 to 11, about 10 to 11 to about 11:15. So about half an hour, 25 minutes of whipsaw choppiness. So what are you going to do with Boomerang then? You're going to wait till the whipsaw subsides. You now have matching dynamic trend bands, right? You see the matching bearish dynamic trend bands? Well, that's your first sign, but the market's still whipsawing. And you don't have a sell channel. But look what happens as soon as a sell channel fires, right here. There's your yellow dot on the signal line. Or if it came right as the candle fired with that, you just take the next one right here, and there's your 3-point move. And notice how there's no pressure on the entry, no pressure on the stop, and it dives instantly in your favor. Within about 1 minute, you had 3 points here. Now, how's that going to feel when you're trading, and you're trading with such ease that you don't have to have that pressure on you? You see what I mean? Once you get your 3 points, you don't care about all this. It doesn't matter. Just ignore it, because all you're doing is waiting for what? A little quiz for you. What are you waiting for? That's right. You're waiting for one of the authorized 90% winning Boomerang trade setups. And that's going to occur when either the dynamic trend bands are matching color or they're within 1.5 points of each other. It's also going to be predicated on what I told you earlier, that you don't have a fat channel like you do here. Fat channels are easy to find and read because they're caused by moves off the bottom with 3-point or more higher candles jumping and leaping ahead. Those 3-point candles, and you get a series of 1 or 2 or maybe a smaller one in the middle like this case here. and then a third one, maybe a fourth smaller one. But by the time those candles leap higher like that, you're going to have a fat channel, and there is no buy trade here because of the fat channel, and it's easily recognized by the 3 spike candles coming in here. 4 of them actually. 1 off the low, 2, 3, 4, and 2 of them, let's see, this one here is 35 half, 38. 3 of them were 3-point candles. So it's very easy to say, fat channel, stand aside. You're not anxious to trade with Boomerang. You have to have a lot of patience to wait for those trades to set up correctly. But these are 90% winning trade setups. So if you want that, you can get that. If you want to just trade because the market's open, you're hyper to trade, well, then expect a bunch of losers too, because that's you're doing a higher risk situation when you do that. So right now, no Boomerang trade here. You with me? Nothing going on. No sell here. Why is that? Because the dynamic trend bands are not matching color. This one's still very much a blue azul color, bullish color. The spread's still wide. Prices, by the time the spread even got close right here, prices dropped off and shot back up. So these are often the easiest trades because this is actually another example of a failed second level or a successful second level trade, but a failed reversal here. The reversal did get some teeth on it, but it never changed the color of the dynamic trend band number 2. Therefore, when everything goes back to matching colors again here, you buy this, pull back the sig line with all the trend bands nice and tight here, matching color, and off they go. So that is our 3rd winning trade in a row on this day, which was 9:15, just a short while ago. And yes, you missed some trades. There was a couple that were fat channels, which you wouldn't have traded, but you just had 4 winning trades. Now, just as an example, if you had 4 contracts on each one of those, a blue-collar working trader is what I call them, 4 contracts on a small $5,000 or $6,000 account, that's $240 per trade, and you just made 4 winning trades with hardly any difficulty. That's $960 minus the commission, which would be about $16 a trade. So about, what is that, $70. So right just under $900 for sitting at home comfortably at your desk. You got your family nearby if you need to talk to them. Of course, when you're trading, you should be concentrating on trading, but I'm just saying at least you're there if there's a problem. You got your nice pet there. You can take a quick run outside to breathe some fresh air after a winning trade to congratulate yourself. And when you're working home alone, you have that patience. Why? Because if you went down to the office and worked 8 hours, they expect you can't sit there and go outside every 10 minutes and breathe and take a walk around, go get a sandwich or something. They want you in there working at the desk and making sure all the assignments are done. And usually you're so loaded with assignments that you can't even get them all done in that one day. You got to take the work with you on the weekend or come back early the next day. You know what I'm talking about. I was in the corporate world for 20 years. I know very well. And you don't want to be quiet. You want to be busy. If you're in sales, oh my God, hit the phones. You got to be on the phones. You got to be setting appointments, getting to those appointments, confirming them, getting back to everybody. There's a whole protocol. I'm very well aware of it. So compare that with sitting in front of the screen here and simply waiting for the authorized Boomerang trades. You see what I mean? Now, after the final hour, we usually don't trade, but here's the final hour. This is a West Coast chart. And you can see here that after the market ran up on that second level run, we don't take any third channel trades. And there was no authorized sell trade coming in here either, except, again, you got to be a little careful in the late hours, but right here is an actual sell trade. Now, I'll tell you why. First of all, now technically we don't trade against a flat dynamic trend band, so you would have been really cautious on this trade here, but the trade did cross over. The colors were all matching here, and then when this one finally turned magenta, you can go ahead and short, even if this one's not matching, because you've already passed the threshold rule of the 1.5 spread. They've already spread lower, so you have that force on your side. The pullback, the sig line came in at 50 quarter, and they dropped down to 47. So there was a tight 3-point squeeze in there, just barely. Now, it was tricky, and if you didn't catch it in time and they went back up here, you would have had to consider maybe jumping out, because then you had a problem here. But technically, there was a 3-point move there. This is not a third level trade. Well, this whole pattern here resets the dynamic trend bands and the trade setup. Do you understand what I mean there? In other words, because we had a second level move here, this one pulled all the way back and the dynamic trend band crossed over. That's one of your qualifying resets, is that it crossed over and you got a new downside move here. That qualifies for this to be a sell trade, but it also resets the upside. So when the market opens up here with a new buy channel, all the trend bands are matching. You have a pullback, this sig line right here, 54.75, and they shoot up to 61. A whopper move on 5.6 point jump to the upside right there. Winning trade number 5. And if you caught this one, it'd have been winning trade number 6. With you had to have caught that first pullback, the sig line there, and that might have been tricky, or you might have just missed out in this one. No big deal. You might have got in it and got stopped out, but you shouldn't have taken 5-point loss here, because if you got short at 50 after this move occurred here, you would have gotten this pullback here at 50, and they took them down to 47. I know it was a tight 3-point move, but once they go back up here and the candles start changing green and changing colors, you got a problem. So you would have wanted to get out of that trade early if you got confused there. But even if you call it a losing trade, it doesn't matter, because you had another winning trade immediately on the other side of the action here. Now again, this is too late in the day, but I want to show you an example of how the market runs up, makes a big run up. Now keep in mind, look at the size of this run up here. This is no laughing matter. This was a massive upside push in the market. You see that? So whenever you get that, even though the pattern reset here, you always still want to be very careful when there is a new reversal to the downside, because usually it's going to be met, I would say 85-90% of the time, with whipsaw. And that's exactly what happened here. How do you solve that? Just wait for the dynamic trend bands to cross, wait for them to match color, and then take that pullback to the signal line. Now what happened here, again, this trade would have held the 5-point stop and moved lower, but you had this huge swoosh to the downside. So what you can do in a case like this, on a new crossover, on a swoosh to the downside, it's just like, it's part of the actual method, but it's a little kind of a trick, if you will, or a modification when you see that the market's starting to turn over to the other side after a big giant move, and it's finishing the whipsaw, but the first level down with the new sell channel gets smashed to the downside. You see, it wasn't like a succession of 3 or 4 candles getting hammered lower, creating a big fat channel, but just like this, you know that this new crossover is going to be a stronger move in most cases after the big up move. Just try to get a discount on that signal line. Rather than take the signal line, just get a little discount by trying to trade them up to the Cobra there. You can get tricky and try to trade in between the Cobra and the dynamic trend band number 1, everything, but if you just use the Cobra, in most cases it's going to work out just fine, and there you go. And again, this is later in the day, so we wouldn't have taken this trade anyway, but I'm just showing you sort of from an academic point of view how you would have handled that as a boomerang trader. You see, there's so little to memorize for boomerang, or to learn, that you can do this easy. So to learn that modification, I don't even mind telling you if you're brand new to boomerang, because it's very simple to understand. You're just trying to get a little better price than the signal line in a situation like that. And that's after a big climb to the upside. Now they're ready to reverse. See what you can do there. So as a review, we came to work on this day, just giving you an example, and that's why I compare it to an office. We call it a blue-collar working trader. You're not in the factory line every day and say all you do is professional stereo install. That's your expertise. And a car comes and you go, okay, here we go. Get those holes drilled in the exact spots where the blueprint shows you. Get the wires all mounted in there. Get them mounted according to the power source. Put the Blaupunk stereo in there. Mount it correctly. Make sure there's no rattles. Everything's got to be perfect, but you're an expert at that, so that's no problem, right? Get that thing wired, get everything in there, test it out, check the stereo speakers, crank it up, make sure there's no buzz in the speakers. It's a whole protocol, and that's one car. And the minute you're done, another car rolls down the assembly line and you're ready to reinstall a new stereo. It's a grind. Like any job has its grind, just like trading with Boomerang. There's a grind element. The markets can grind you out. They can be very difficult to trade sometimes. But following the Boomerang rules, there's very little to memorize, and the key thing and the hardest part for a lot of traders is to simply sit at your desk and wait for the correct setups. If they swoosh down so fast you couldn't get in, you don't care. Oh, I want to trade. You're not anxious to trade. You don't care. Didn't work. It was a fat channel, no trade. You're waiting here, you see the Cobra change color, you see the new buy channel in. You go, the spread's too wide, I can't trade until the spread's tighter. Maybe you jumped the gun here and bought this, and if you did, you got rewarded with a trade, but we counted that as a no trade because the spread wasn't tight enough to right here, and this final dot had printed. That's okay. What do you care? You're just there to follow the rules of Boomerang and collect your paycheck. So here's that second level trade. Trade number one, winner. Nothing to do up here. I showed you how to avoid the choppy markets, how Boomerang does that with the 450 tick chart. It's built into Boomerang. When these colors are all mismatching, it's not Boomerang and it's all confusing. No, you don't understand what I'm showing you if you think that. You didn't read the rules. You didn't listen to me here in the webinars. This is Boomerang telling you to stand aside. It's not sending off multiple alternate signals that are getting stopped out. That's only if you're too lazy to study the rules and come to the webinars. No offense, but guess what? I was lazy when I started. I just wanted everything instant and what I call a push button system. I just want to grab it and push buttons and make money. That's partially caused from fear, partially from ego, and mostly from pure unadulterated laziness. Laziness will only lose a lot of money in trading if you don't really work hard at trading and study the rules. So no trade there. Here's our second winning trade here. No trade here. No trade here. Nothing here. Nothing here. There's that second level move there. So there's our third winning trade there. I already showed you all this, but I'm just reviewing it. Nothing here. Nothing. Well, here was that one quick 3-point move you may or may not have caught. Here's our fourth winning trade up here. Instant gratification as they run up. And then that's it. So I think all in all it was 5 winning trades. A great day. But just another day. If you only had one winning trade and nothing else set up because the market was going crazy and acting like a gambling casino on steroids, you didn't care. You sat there all day. You made one Boomerang trade and nothing else showed up. You went home. Have you ever had a day where you went in the office or the store, if you work at a store, and you just felt like you didn't get anything done? It was one of those days. An unproductive day. Well, that happens in the markets because the markets, like any business, is just the same routine every day, essentially. It's the same market, the same routine, and it's no big deal. Some days you're going to be flowing from Boomerang trade to Boomerang trade, 10, 12 winning trades in a row if you stick in the market all day. I don't recommend it. I suggest you get 4 or 5 winners. Just stop for the day. But you'll have those days. I've had them many, many times, and it's a blast. It's fun. And there's other days that no matter what you do, the market just acts completely different. It grinds you out. It doesn't seem to want to go where you want to take it, even though you've used that exact method many times. Many of you experience this if you're not using Boomerang and you have different methods you've tried or you've combined methods and things. Some days that method will work like a charm, and other days for some reason it doesn't work. Don't ask me why. We all struggle with that one. Here's a new day. And again, I'll just go back over what we did in the first 40 minutes here is I explained the components of Boomerang. So now you're an expert on those, right? And I explained to you exactly how the Boomerang setups work, and I went over the 3 rules. I explained what a fat channel is that we don't trade against, right? And I also explained a slight modification for a trade that takes off in your direction and but doesn't form a real big fat channel, but just kind of takes off, and then you see the dynamic trend bands crossing. But for now, I wouldn't even worry about that. It's just something for more experienced Boomerang users. But I did explain it all here just so you have it on record. Here's the market opening up here, and you're just watching the market spike up off the opening and pull back. So here's some whipsaw coming in. But what are you doing? You're focusing on the dynamic trend bands and the trade channel, all the components of Boomerang. Mostly the trade channel and the dynamic trend bands, and you're watching the Cobra as a backup. So here comes the dynamic trend bands squishing together here. Now you got to have dynamic trend band number 1 has to be on the same bull or bearish color of the trade channel. You have to have dynamic trend band matching the channel. And then you just watch for what? That's right, that they're squished together a 1.5 or less. In this case they are. You have the new sell channel. It's there, but the arrow is covered up under this candle for some reason. That happens once in a while. It's no big deal. And you get the pullback of the sig line right here and right here. Number 1 and number 2, and you short, and 52 quarter drop down to 45 half in less than a minute, 35, 40 seconds. You got short. That's a good feeling, isn't it? You got short of 52, blunk. It knocked your stop out, because we have automatic brackets on Boomerang that we set up, so all you have to do is push buy at the market, sell at the market. No bid or ask or limit orders, just buy or sell at the market. Boomerang's designed to cover the slippage and everything. And then it automatically puts a 3-point bracket on there and a 5-point stop. And it goes down, boom, hits a bracket. You made $240 if you're trading 4 contracts. If you're trading 8 contracts, you made $480, just under $500. And if you make 3 winning trades like that, with that kind of size, you're going to have a good day. Trade number 1, I'm just going to go over this again. Dynamic trend bands, Cobra, trade channels. That's it. Again, we have these excellent bias indicators down here, which I talked to you about earlier. But when I introduce the dynamic trend bands in the 90% guaranteed winning trade signals based on the rules I'm showing you today, the simple rules, we don't really need to focus that much anymore on these bias indicators. They're just handy things to have when you're sitting in a trade and you want to make sure everything's going your way. Trade number 1 here. I'm going to go over some setups today, but I want to make sure that you understand the components and the exact rules. So once again, fat channels, it's the easiest thing in the world. It's not complicated. That's the only thing you're watching out for when you go to get in a trade. Fat channels are formed by 1 to 3, maybe 4 candles, 1 or 2 of them which are 3 points in length or more. When you get a series of those stacked together, they're going to form a fat channel in most cases. Now, not always, and I'll show you a case where they didn't form a fat channel. So here's the market getting slammed lower. You've got the Cobra crosses over first, over the dynamic trend band number 2, which is very steep. Here it flattens as the crossover occurs. Now notice this, as the crossover occurs here, within a 1.5, and then crossing, the sell channel opens. Now, there was only this one spike off the sell channel, or the buy channel here, 40 half, ran up to 44 half, 4-point candle, but by the time it got to the third candle, they pulled back the sig line, and that's where your entry would have been there at 42.75. Now notice that. You have to be quick. You have to be ready. 42.75, shot straight up in a couple of minutes or less, handed you your 3 points. That's our second winning trade of the row. Now I want to show you something that's very important. Don't totally rely on the printing on the pullback in the signal line. When it hits, it'll sound alarm and it'll print on the signal line. But I want you to mostly do this. Here's what it looks like on the right side of the chart. So you're watching this come down. First thing you're looking for are the dynamic trend bands. Is number 2 flattening, and is number 1 crossing over and matching the buy color? You see that? Here comes the sell or buy channel shooting up here. You go, okay, whoa, here we go. We got the qualification here on the DTBs. Got the Cobra crossing over and it's green colored. Now the buy channel opens up. Oh, it's a spike candle. Number 1. A small candle, number 2, and then a pullback right here to the signal line. But what I want you to do, see this 42.70? Now I know it's gray. That's because if I backtrack the chart, the colors will change. But that will actually be marked green when you're looking at it live right here. 42.70. And the price marker on this particular scroll here is up here at 43.45. But trading back just a little, and I can't really quite do it because when I click it, it'll go on one tick at a time. But you see here, the price marker will be set up on the screen here, and you'll see this price marker here, this 45 quarter, will come back down and merge into 42.70. So that's where you want to be watching the price markers. Get rid of all the price markers except for the trade signal line and the live price. And when that live price marker comes down, because you know it's going to be within 6 candles of the new sell channel opening, you got the dynamic trend bands matching. When that comes down and hits and merge into that price, just go ahead and hit your buy at the market. And I guarantee you the dot will print and the sound alarm will go off on the signal line. You want to get in on that trade, and then up it goes. And you even had another pullback here and another pullback, but anything past 3 taps in the signal line, you probably don't want to take it. It's getting a little late. You should have grabbed the first one or the second one at the latest, and then up they go. Even the third one, though, 45 quarter shot up to 49.5. So, starting out the day, you can see 1 successful trade here, trade number 2 successful.
Reversing position.
Now, a quick comment, because I just noticed this, and if you notice this, what about this here? Isn't that a trade? Well, you did have the counter buy channel on the first move down. That failed in the counter sell channel, but what happened is when that sell channel opened up, you had a massive whipsaw spike loader, 41.75 down to 35.70. 6 candle spike lower. You're probably better off just avoiding that. Now, the pullback, the signal line at 38.75 did come all the way down to 34.75, giving you a 3-point trade. But that's too much whipsaw. Whenever you see whipsaw, you want to run and hide. You don't. No, I'm just meaning that, like, if you see violence in the street and all of a sudden people are fighting and with billy clubs and you don't go up and say, hey, what are you guys doing? Cool down, peace and love. For God's sakes, you get in your car and get the hell out of there. You don't want to be around there. So similarly, when the whipsaw starts occurring, don't sit there and think you got to figure it out or solve it using Boomerang or your mind or anything. That's the thing, is Boomerang gives you the freedom to no longer have to sit every day and figure out the markets from that $3,000 to $5,000 course you just spent money on, and he's got 10 different things in there, and you don't know what the heck to do. When the market's under fire and moving, you're trying to think back into your textbook brain and go, let's see now, that happened and that happened and that happened, so that should have been a buy, but by then the trade's gone. Boomerang does all the work for you, so you don't have to sit and figure everything out. So there's your second winning trade in a row. And you're just sitting at your desk, and you've now made, if you had 4 contracts in there, you just made almost $500. Just depending on how you're feeling that day and how everything looks, you might want to just take the rest of the day off. Well, anyway, what happens here is you get a counter move, right? Here's the dynamic trend bands coming together. See that? It's within a point and a half, 46 half, 46.75, 48 quarters. So here they are. Technically, technically this is a pullback within that realm there. It's a good solid point and a half. So you take this short here at 43, and 43 comes down to 39. You see that? 43 comes down to 39 quarter. So you had 3 points in there on that trade. It was set up right. It was the right configuration. Everything was right about that. And you made 3 points on this trade too. So that's your third winning trade in a row. Now you're watching, now the market shoots back higher here. Now this is an interesting phenomenon here where the new buy channel opens and the print on the sig line both fire at the same time. And I see those all the time where they go boom, boom. Well, you're probably not going to catch those because usually with Boomerang, you're waiting for the trade channel open, then that pull back the sig line. And if they both fire like that, especially with this configuration like this, you're going to miss the trade. And what happens is the price just shot straight up. This market was very much hyper on the bullish side, probably being rigged by the Federal Reserve, which they've been doing for the last 8 years, very successfully and very solidly. Prior to that, they did it too, but this last market run we've had, that's what's going. In fact, they were even talking on them on CNBC. Now, keep in mind, 10 years ago, people, when I would tell people this was happening, they'd treat me like I was crazy. Now, today, I heard it myself. The CNBC people talking, well, the Fed, has propped the market up for the last 6-7 years, so they've got pretty much all they can out of their market rigging and propping, and the fancy word for the market rigging, quantitative easing. Ooh, that sounds really legitimate, but it's called market rigging. So today they're openly talking about, well, they've got enough out of their rigging as they can, and now the market's still kind of bearish and falling, so maybe they've spent all their rigging energy and that's all that can be done. One big hedge fund manager was on talking about all this. So for all of those, and I know none of you are here in the room that did that, for all of those who blamed me endlessly with emails going back 8 years, 9 years when I was openly talking about the rigging and saying they wouldn't do that, you're crazy, Mohan. Well, guess what? I was right. Who cares? You see, in the market, being right is useless. All that matters is being on the right side of the market, getting in the trade, making the money, and the rest is all just, who cares? Because sometimes you're wrong and you make money, meaning you maybe have a bearish bias, but you see a bullish boomerang signal like right here, and you buy it, and it shoots up. So no matter how bearish you were here, theoretically, once you saw the dynamic trend, you saw a new buy channel, you saw the dynamic trend bands match, and a pullback the sig line, you got long at 64.75, and they immediately shot up to 68 quarter, and you made 3 points, or approximately $250 on a 4-contract basis. You're right. That's all that mattered. Boomerang was right, and you were right for getting long. Anyway, here's a classic example. I want you to see this because it's a classic example. Markets choppy. We move lower here. They start to whipsaw around. They take off here. Everything's matching. You got to buy that action. Up they go. Now here they're starting to fade lower again. Here's the dynamic trend band number 1 changing color. The Cobra has crossed over dynamic trend band number 2. That's usually what's going to happen. Not always, but usually. Here's the sell channel opening up. You got all the ingredients. What's missing? What's the spread? You just quickly put your cursor up there and you say 43.70 and you go 68.75. Point and a half, there it is. See that? So all you do is do what? You trade the pullback to this, where this dot is here, and you can do that on the right side of the chart because you got your right side of the chart you're watching. You watch that pullback sig line, or you catch it right there and then the signal goes off. And look at that. Zero pressure on the entry and instant gratification as 66 quarter drops off to 55. Oh, my God, 10-point move instantly within minutes. Let's see where that was. 10-11. Oh, no, this took about 10 minutes to form. But the point is, when you got in on the boomerang signal, 66 ran to 62 quarter in about 3 to 4 minutes here. That's normal. So that's trade number, I think, let me go again. I hate to go all the way back here. 1, 2, 3. Missed this one. Took off without us. Nothing here. 4, 5. Now here's a I love these. These are some of the best trades, and sometimes they're hard to take because you can't imagine it's going to work out, but they're just so cool. Here's trade number 5. Counter move. New buy arrow. A new counter move on the channel, right? Here's a sell channel coming back in here, so you take the trade on this yellow dot, the first yellow dot that appears. Now there was another buy counter channel because of the whipsaw, but don't worry, you're short, you're on the right side. Here's another sell signal here, but your sell right here held up, 62 held up nicely, only about a point of pressure on that, and down they came. So trade number 7. See, now all you did was sat, but you had to sit there all day and wait for the right setup and let the market fly around and do whatever. It's sometimes the hardest part to do that. Trade number 7, now look here. Down they come. Cobra crosses over. Dynamic trend band number 1 is bullish color. Here's the buy channel. What's the spread? 52.75, 51. So about a 1.75 spread here. So you didn't take this one most likely, but you can take this one. That's okay. And up they go. Winning trade number 7. Then you got a choppy climb to the upside, and then you finish off the day. So real quick math here. 7 trades times, and I'm basing it on 4 contracts, $240, $16.80, and 7 times 16. So around 15, little more than $1,500 on this day. So that's an instant paycheck that you take home. And I'm trying to instill this idea in you that all you're doing is sitting at your desk. You can, between boomerang trades, if it's really slow or something like that, you can just go ahead and look at the news or watch some videos if you have some certain kind of music you want to watch on videos, or you got these channels you can buy with music on them and just put it in the background. Do whatever you want to entertain yourself, but just make sure and watch the market. A little multitasking, no big deal. But the idea is to watch the market, sit there patiently all day and take the boomerang trades and know how to avoid the whipsaw. I'll show you that right now. Now this is, as we progress the charts forward, I have to tell you this, the last week and a half, counting a day, it's been really, really weird. I'll just say that it's been weird. I mean, everything works with boomerang and everything, but it's been very, very weird because we had 6 weeks approximately, 5 to 6 if I recall, of the most absolute insane volatile markets I've ever seen in 25 years of trading. 25 years of trading in the most volatile markets I've ever seen. Unbelievable. So we come out of that last week and we got what? We got the big Fed announcement, and everybody's pushing this interest rate thing. They're not going to raise interest rates. I've been telling people this for 4 months while this weird media keeps pushing the Fed raising interest rates, and they're not going to raise interest rates. Not yet, at least, not for a while. But the point is, so they had that big meeting on Wednesday. You had option expiration on Friday, which normally I don't trade. You can still trade boomerang on it and everything if you want, but I just take that day off. So you had Tuesday and Wednesday was a Fed meeting, and all that week the market was so strange because it was either full-on whipsaw or as relentless pounding in one direction. I mean relentless. Up, 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 pushing up, more, up, push, up, up. and then reversing. And then once it gets going on the downside, it's not like, oh, we just had such an up period, they're going to catch support and revamp back up. Nope. They just kept slamming them and slamming them. And I'll show you some examples in a minute, which is fine. It doesn't affect Boomerang. If you have the patience to sit there all day and sit through all that, you're fine. But if that makes you all anxious to trade, then you're going to take more risk as you look to trade more things. But look at this. Here comes massive whipsaw pre-market. Here's the opening. Massive whipsaw up here. More whipsaw. But I want to show you what happens so you understand. In spite of all this, so here's the market coming down. The market opens. It's 15 minutes into trading, which is good. New buy channel. Market spikes up, pulls back the sig line, 71.25, and jumps up to 75, 3 points. Counter move. Watching for the what? Little quiz. The next buy channel, because what? The dynamic trend bands are on the same side. This didn't upset the downside move, so you should get a second level move here. Pullback sig line came right here at 73.75, and they shot up to 77.50 for 4-point move. So there's your two moves. You're not going to take a third level move. That's not part of the Boomerang rules. So all of this is discounted. None of this is valid because a crossover just occurs here, but the market's spiking lower, forming a little fat channel. It's just whipsaw, and you're not going to make another move up here. So you're just waiting. So they get over to here after finally climbing up and up and up. And here's the dynamic trend band squishing together. Here it is bearish here. New buy channel. You spread this out a little. You can see the spread 80, 80 half. It's really tight here. You sell the signal line here at the signal line at 78. They come down. 78 runs 73. So here's a day that's really crazy, kind of whipsaw day. One winning trade, second level winning trade, nothing up here as all this whipsaw climbs up here. And look at this candle here, just going nuts. It can really distract you and throw you off. That's why I really am letting you know, if you just sit and treat it as a day at work, let all this stuff fly by and ignore it, and watch the dynamic trend bands. There's your signal. Everything's matching. New sell channel. There's your fourth trade, wasn't in a row. Now here's where you got a low here, but look at this. Here's a big spike candle off of here, then 1, 2, 3 more. Whipsaw pulling back. Now this trade did hold and made a 3-point winner, but this would have been a fat channel you would have wanted to avoid because of the 3 spike up candles. That's the simple way to understand it. If there had only been one smaller spike and maybe one medium one and a pullback, you could have taken that trade, and that's kind of what you had here. But this big one off that low is what caused this massive dive higher, and those, you just have to be careful with those. Second level trade. Look at this. I mean, it's unbelievable. Even amidst the whipsaw, here's a crossover, right? Here's the counter sell channel that fails. Here's the new buy channel. Here's the pullback, the sig line, 82.75, holds 79.75. It wasn't pleasant. It pulled back 3 points against you, but then they shot up and gave you your, I believe, is a 5th winning trade in a row. And then coming into the later part of the session, classic move right here. Bands tighten up, sell channel, prices below the dynamic trend band number 2, tight channel, 3 points, 6 winning trade in a row, nothing here, fat channel forming up here, whipsaw coming up, whipsaw coming down. Just forget about it. When they're spiking like this, just leave it alone. Odds are increasing. Get stopped out. What do you want to do? Just let it flip around, and then all of a sudden you notice the dynamic trend bands have crossed over. Now they're matching color, right? You got a sell channel here coming in and another one here because there was a counter buy one. Even if you saw this and traded short here, 91.25, you would have been fine. You know, it got a little scary because they did run up 4 points against you, but technically you would have probably wanted to make sure everything matched and traded them here. Even down here would have been okay. But that's like the 7th winning trade in a row. Big move to the downside. Same thing. Watch for whipsaw as they start to settle over on this side. So here's your first buy channel. And as it would occur, this one ended up being fine. You know, the whipsaw wasn't that strong. As the spread tightened up here, you could just buy the pullback signal line for the 8th winning trade in a row. Now it's getting later in the day. Steeper dynamic trend band, no counter trade here. Nothing to do here. Now the trend bands have crossed over, so you got to be careful looking to buy them here. Although that buy trade there worked out, it wasn't the right configuration because you need number 1 to match, and you need them on to match colors in order to take the trade. And by the time they matched, they shot up all the way already here. Whipsaw coming down here, same thing. See that? All that whipsaw, you just avoid it. Don't worry about it. Just leave it alone. However, look at this. You got to learn to recognize this stuff. It's so simple. Here's the crossover. Here they come down, forming a fat channel. If you turn your head to the left, you can see how fat that channel is. Counter move, new sell channel coming down with, you're on the same side of the, everything's matching, bearish on the DTBs. They've crossed over. So you can trade that pullback signal line there at 93, and down they come to 87 in an instant. 9th winning trade in a row, and now you're working on the final hour here, getting close to it. And you can see all the dynamic trend bands are matching right here. Pullback signal line, 10th winning trade in a row. Notice we haven't had any stop outs. We had one a few minutes ago that was pretty close, about a 4-point push against us, but didn't get stopped out. 10th winning trade in a row, and same thing here. Now the qualifier is that you have to have the arrow, the counter, in this case sell channel arrow. The dynamic trend bands have crossed over. They try to push lower. It opened a sell channel, but you don't take the trade, obviously. You're waiting for what? A counter buy channel to open up again with everything matching. Here it is. Here's a pullback signal line. 11th winning trade in a row. And you still got some more time in the markets, but I would have been out probably on the 6th winning trade. I would have been down at the beach. That's just me, I guess, because I've been trading 25 years. You get to the point where you kind of get to know after 25 years that the market will be open tomorrow, and there'll be some, new thing. The Pope's coming and speaking at Congress, or it's the Yom Kippur holiday today, and the volume might be a little different. But in the end, it's like another day of trading, another day at work. So the point is, what happened here? Market shot up, dynamic trend line flat, and they crossing over right here, right at the crossover. It's a new sell channel. Pull back the signal line, 34.75. Now they come for the 11th winning trade in a row. Counter buy channel. Look at this. It's just like so routine. Counter buy channel in a trend move down. New sell channel pointing the way back again. And there's a 12th winning trade in a row. There was only one trade that had some little bit of pressure on the entry, but it didn't get stopped out. But they moved about 4 points against you. Here's a 3rd level trade. We don't take those, and now we're into the final hour. Here's a 4th level trade. Heavy smash to the downside. See, this is what I'm talking about. All of a sudden, after all that volatility, then we come into last week. This is from last week, and you get this relentless pounding and pounding. It like wouldn't let up. It was like unbelievable. Well, finally what happens? You're not taking these trades, even though you're sad to see them go by. You're just waiting for what? That's right, the next squished together DTBs, new buy channel, 1.5 apart, 74, 72, 75, right there. By the pullback signal line, and up they go. So that's 13 trades in a row, and you're done in that last hour. 13 trades, 13 times $240 is $3,120. I'm using 4 contract example. 13 times $16 commish per each one is 208 bucks. So technically on that day, if you took all those trades, it's all hypothetical in the sense that you'd had to have sat there and taken them all. And I got fanatics, I'm telling you, boomerang fanatics, that they sit there all day and they watch my webinars like this one 20 times until they get their brain aligned with what I'm saying, and they get it, and they go back on simulation at nighttime and they trade it and trade it and trade it until they say, yeah, I get the exact rules now. I'm not going to alter those rules. I'm not going to fudge them. And we have some fanatics that sit there and they'll catch days like this. They'll catch all the trades. $2,912 on this day as a blue-collar working trader, not drilling holes in the new car, putting the wires in, you get everything set up in the car with the speakers and everything. One of the speakers rattling, you have to pull it out and reconfigure it, find out why the darn thing's rattling. Maybe it's a defect, you throw it out, bring a new one in, wire it up again, put it back. I'm just saying, every job has got its grind and its hard things to do. What I'm showing you here is a very simple way to start a career in trading and make steady winning trades with Boomerang Day Trader. So I really want to thank you for joining with me today. I appreciate it very much, and I hope I've explained everything thoroughly. And of course, if I haven't, or whatever, and I hope it's exciting for you to sit in on this today, you can always email me at mohan@daytradersaction, and I can send you some other examples if you need it, or guide you to place on the blog. Most of the time, though, all you have to do is go to our blog at boomerangtrader.com. I'll show you this here. This is the resource for all things boomerang. I explain everything here, and then you can look at past ones like this today. See, here's our training class. I somehow put 3 on there. Who knows? It's part of being a human being. It's 8:23, yes. And you can look at other things on here, learn all about Boomerang, or just, like I said, email me if you have any questions. I'll be more than happy to go over that with you. And while you're there, make sure and watch our history of trading mathematics video. I'm a little bit proud of it. It's a short video, but it gives you the history of our founding fathers of trading mathematics, going from Pythagoras to Fibonacci, Gann, Elliott. It's good. You're in this business. You might as well know all you can about it and learn about the markets. And like Fibonacci, for example, you know, when you count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, you write a check, $1,195. You're buying Boomerang, of course, right? You're writing 1,190. Those are all because of Fibonacci. We're writing those numbers. He brought the Hindu Arabic numbers over from the Far East and introduced them into the European markets, and all the traders started using them. And to this day, we still count that way, and that's all thanks to Fibonacci here. What a cool guy. Look at that, man. I'll tell you, Fibonacci for president. Brilliant looking guy. But thanks very much for joining with us today, and I'll look forward to seeing you on our future webinars that we have.